Welcome to the AI Research Roundup. I'm Alex. Today we're looking at a paper from the Hugging Face trending list, published on November 5th, 2025, just yesterday. The main punchline is that static leaderboards do not predict real trading skill. The correlation between LM arena scores and cumulative return is about 0.05 in stocks and minus 0.38 in Polymarket, while some models still adapt to live signals. The paper is titled LiveTradeBench, Seeking Real-World Alpha with Large Language Models, and as we will see later, the implications for evaluation are quite significant. Also, the authors shared a GitHub repo. It's a full-stack fast API platform to run and evaluate LLM trading agents in real time across stocks and Polymarket, with a REST API, pip install, quick start scripts, rich Python examples, backtesting, and mock modes. You'll find clear package structure, front-end, back-end, and tests. Alright, Table 1 compares trading benchmarks across 4 dimensions and shows what is missing in most prior work. Sequential decision means the current trade depends on previous actions, which matters because markets evolve continuously. The table highlights that only LiveTradeBench covers sequential decision, portfolio management, live trading, and multi-market evaluation. Most alternatives rely on backtests or single markets, so they cannot test adaptive, cross-asset reasoning. So, Table 1 set the scope. Figure 1 shows how the benchmark spans stocks and prediction markets, which matters because the two react differently to news. The left panel tracks Apple stock and highlights a jump around the iPhone 17 release on September 19th. The right panel shows a Polymarket contract, where the price represents the belief an event occurs, spiking around the GPT-5 release on August 7th. The bottom panels list the tradable assets across both universes. Well, Figure 2 explains how agents perceive the market and turn that view into trades. The figure shows the observation space combining positions, live prices, and short news context. The action space uses percent allocations, which means the agent proposes portfolio weights that translate directly into buy, sell, or hold orders. The US stocks panel illustrates shares and cash with news snippets. The Polymarket panel mirrors this flow for binary event contracts. So Figure 2 showed how agents act. Table 2 reports how those choices translate into live performance. This table compares models across stocks and Polymarket, using cumulative return, Sharpe ratio, maximum drawdown, win rate, and volatility. Sharpe ratio means reward per unit of risk, so higher is better. The left block lists stock results, where GPT 4.1 tops cumulative return at about 6%, but carries notable swings. The right block shows inconsistent transfer to Polymarket, with several strong stock performers suffering deep drawdowns and lower win rates. Alright, 2 takeaways stand out. Static leaderboards fail to predict real trading skill, and success does not transfer across markets, so genuine competence requires timely adaptation to live signals. The broader implication is clear. We need evaluations and agents designed for sequential, risk-aware decisions in dynamic environments. That is it for the AI Research Roundup. I am Alex. Thanks for listening.